And let's remember, the United States is the largest debtor country in the world. I don't want to overstate this, but we haven't had this kind of discussion before, and it tells you that we are coming toward the end of this game that has been played at least since the United States went off the gold standard in 1971.
The world's second largest economy just pulled the nuclear trigger on America's financial empire. China's central bank researchers are openly declaring US Treasury holdings unsustainable, while quietly dumping hundreds of billions in American debt.
And being caught at a time when the American empire and system is clearly declining, and the Chinese, not empire, but system is rising, the whole world can see that.
What happens when your biggest creditor decides you're too broke to trust?
Chinese government, the Chinese authorities in the Chinese bank want to reduce their exposure to US dollars.
Think America's dollar dominance is untouchable. Well, here's the reality check nobody wants to discuss. China has been systematically reducing their US Treasury holdings from over $1 trillion to barely 700 to 800 billion range. That's not market fluctuation, that's a calculated financial divorce. The People's Bank of China isn't just trimming around the edges anymore. They're making strategic exits while publicly questioning whether America can even pay its bills.
There are usually multiple reasons, but among them, no question at all, is the fact that the United States' indebtedness, and let's remember, the United States...
But here's where it gets absolutely terrifying. The United States currently sits as the world's largest debtor nation, owing money to practically everyone while running trillion-dollar deficits like it's going out of style. Trump's big, beautiful bill just locked in these massive deficits for the foreseeable future, essentially guaranteeing that America will keep borrowing more money it doesn't have to pay for spending it can't afford.
The States has been a deficit country now for quite a while, and its debts around the world have grown quite a while. Countries around the world.
Meanwhile, Beijing's financial analysts are asking the uncomfortable questions American politicians refuse to face. Why would any rational creditor keep lending to someone whose debt to GDP ratio keeps climbing into dangerous territory? The Chinese aren't being dramatic here, they're being pragmatic. When your debtor keeps adding zeros to their tab while showing no signs of fiscal responsibility, smart money starts looking for the exit.
Okay, all of them and the many others that hold American debt are very worried by the level of debt being added to all the time, because that's the way the Republicans and the Democrats resolve their contradictions. It's a very...
However, the implications stretch far beyond simple accounting. China's treasury dump isn't happening in isolation. It's part of a broader global trend where major creditors are quietly reducing their dollar exposure. Japan remains the largest holder of US debt, followed by China, then Britain, yet all three are expressing concerns about America's borrowing trajectory. When your top three creditors start having public discussions about your creditworthiness, that's not a good sign.
How do you resolve, if you're not going to tax the corporations and the rich, to pay for the spending that you better do, or else you'll lose the people's support?
I bet you don't know about this, that America's addiction to debt stems from a peculiar political arrangement that would make any financial advisor weep. Democrats want public spending, Republicans want tax cuts for corporations and the wealthy. Instead of choosing one or raising taxes to pay for both, they've created this bizarre system where they borrow money from the same corporations and rich individuals they refuse to tax. It's essentially asking your creditors to lend you the money you won't take from them through taxation.
In America, there is no courage politically, so they don't tax corporations and the rich. They keep cutting the taxes, as they did a few weeks ago, again under Mr. Trump, having done it in his first presidency back in 2017.
The worst part of the situation is that this creates a vicious cycle where America becomes increasingly dependent on foreign creditors to fund its operations. The dollar's reserve currency status has allowed this charade to continue for decades, giving America enormous advantages in global finance. Countries worldwide accumulate dollars, America prints more, and the cycle continues. But every system has limits, and China believes America is approaching its breaking point.
Side effect of making us a debtor country. We're borrowing forever. And now the terrible fear, which is always there in every creditor. I'm making a lot of money by lending, but I've got to be careful not to lend to whoever borrows from me if there's a chance they won't pay it back. Well, the United States.
But wait, you will be shocked by the numbers. The arithmetic is becoming impossible to ignore. America now spends over $1 trillion annually just on interest payments for existing debt. That's before any new borrowing. With 2 to 3 months left in the fiscal year, that number could hit $1.2 to $1.3 trillion. Meanwhile, Trump's trade war requires massive government subsidies to make domestic production competitive, which means even more borrowing.
Chinese to unload in a short period of time significant parts of that debt, because that would crash the price of those bonds. And as we all know, that would raise interest rates. And China's a big enough player that this would be all kinds of problem.
From China's perspective, this creates a double nightmare scenario. First, they're essentially funding their own containment strategy. Chinese money buying US Treasuries helps finance American military buildup in the Pacific, technology restrictions against Chinese companies, and trade wars targeting Chinese exports. Why would any nation voluntarily subsidize policies designed to weaken them? Second, Chinese assets in America are increasingly vulnerable to political weaponization. Russia lost $200 to $300 billion in seized assets, and China holds $700 to $900 billion in the American financial system. Beijing watches nervously as American politicians casually discuss confiscating foreign assets for policy purposes. Smart money doesn't stick around when the rules keep changing. Subscribe if you want to understand what mainstream media won't tell you about America's financial empire crumbling in real time, because this story is just getting started.
And they are in the process of discovering when you suddenly destabilize all these webs, it is impossible to know how that works out, and it can just as likely work out at your expense, that would be the American expense, as that of anybody else.
The dollar's decline isn't theoretical anymore, it's measurable and accelerating. Recent data shows the dollar index dropping significantly, sometimes losing half a percentage point in a single weekend. While financial media focuses on daily fluctuations, the long-term trend is unmistakably downward. Countries are quietly diversifying away from dollar-denominated assets, and China is leading the charge.
The weighing of the American government, which understands this, that the benefit of China buying the debt is greater than the loss, if you like, of the $40 billion that goes to subsidize China rather than the United States.
Now, the concern is that American policymakers face an impossible situation. They need foreign creditors to keep buying US debt to maintain current spending levels, but their aggressive foreign policy is driving those same creditors away. It's like insulting your banker while asking for a loan extension. Eventually, even the most patient creditor reaches their limit. The mechanics of dollar collapse aren't mysterious. They follow basic supply and demand principles. When America floods global markets with treasury bonds to finance deficits, and fewer countries want to buy them, prices fall and interest rates rise. Higher rates make American debt more expensive to service, requiring even more borrowing in a death spiral of fiscal mathematics.
Better conditions, better wages. and capitalism was doing well enough in the United States, we were replacing all the other empires that had been destroyed.
What makes this situation more terrifying is that China's pivot toward gold and natural resources represents a fundamental shift in global finance. Instead of holding depreciating dollars, they're accumulating tangible assets that maintain value regardless of American monetary policy. Other nations are watching closely and drawing similar conclusions about dollar-denominated investments. The geopolitical implications are staggering. For 70 years, dollar dominance has allowed America to wage wars without raising taxes, impose sanctions without consequences, and maintain global military presence funded by foreign creditors. That system is ending and the transition won't be gentle.
And I think Mr. Trump, in his frustration, but the forces behind him, in their frustration at being caught, and being caught at a time when the American empire and system is clearly declining.
Trump's administration seems caught between maintaining the illusion of fiscal responsibility and accommodating political demands for increased spending. Their solution, massive tax cuts paired with record government borrowing, satisfies nobody while accelerating the very trends that concern America's creditors. Here's where things are getting out of hand. International investors are already adapting to post-dollar reality. Portfolio managers are reducing treasury holdings, increasing gold positions, and exploring alternative reserve currencies. The smart money isn't waiting for official announcements about the dollar's demise. They're positioning for it now.
It's very painful to live in that frustration, and then they act impulsively. That's what these tariffs are about, and the sanctions are about.
Domestic American consumers feel the pressure through persistent inflation that official statistics underreport. While the government claims 3% annual inflation, actual grocery and retail prices suggest double or triple that rate. American families are experiencing dollar weakness directly through reduced purchasing power, even as politicians deny any problems exist.
Floating ones were Germany and Japan, the two losers of World War II. They had recovered with some help from the United States, by the way, along the way.
Global financial markets are preparing for a world where the dollar is just another currency, not the indispensable reserve asset it's been since Bretton Woods. That transition represents the largest shift in global economic power since World War II, and it's happening right now while most Americans remain completely unaware. The question isn't whether dollar hegemony will end, it's how quickly and chaotically that ending will unfold. China's Treasury sell-off suggests they believe the timeline is shorter than most experts predict.
It's merely as a collection agency and ships those $40 billion of taxpayer money to Beijing. That's Chinese interest on the debt of the United States, which the Chinese are free to use in any way they see fit.
But here's the truly horrifying part that'll keep you awake tonight. Every single American taxpayer is unknowingly funding China's rise to power through a mechanism so absurd it sounds like financial fiction. When China holds $800 billion in U.S. debt at 5% interest, American taxpayers send Beijing $40 billion annually, not for roads, schools, or defense, but as pure tribute payments to their biggest geopolitical rival. That's $40 billion of your tax dollars flowing directly into Chinese coffers every single year, funding whatever Beijing decides to spend it on.
You know what we're doing? We're providing subsidies. We're giving money to corporations, the same ones who left the United States over the last 50 years. We're now giving them our tax money, and you know what for? To bring them back.
Imagine explaining to a World War II veteran that America now pays China tens of billions annually, just for the privilege of staying financially afloat. The same country building military bases to contain U.S. influence receives massive subsidies from American workers who can barely afford groceries. It's the most twisted protection racket in human history, except the victim is paying the aggressor to get stronger. Even more shocking, Trump's Federal Reserve manipulation plans could trigger the very collapse he's trying to prevent. If his goon squad forces interest rates down to zero while flooding markets with the new Treasury bonds, lay basic supply and demand economics guarantee a catastrophic outcome. Too much supply, artificially suppressed prices. It's a recipe for the kind of bond market explosion that would make 2008 look like a minor correction.
Has been willing to lend. But as with all things like this, eventually, if you keep doing it, you will destroy it. You will overdo it. And that's the issue that really is coming to the fore now. The world's
foreign creditors are already preparing for America's inevitable default scenario, not through official bankruptcy, but through currency devaluation that wipes out debt obligations. It's the oldest trick in the sovereign debt playbook. Inflate your way out of what you can't pay back. China knows this, which is why they're converting dollars into gold and resources that maintain value when currencies collapse. Ready to learn more about how this financial earthquake will reshape global economics? Like and subscribe for analysis you won't find anywhere else.